The broadcast is now starting. All attendees are in listen-only
Welcome
mode.
everybody to today's pick for April 11th. We are going to look at a long position in symbol URI, United Rentals Incorporated. Now taking a look at the proprietary risk reward from Tradespoon, we're coming in at a 4. And the value momentum rating is coming in at a 9, so it's on the top end of that scale. As always, you can take a look at our detailed analyst report that comes from Tradespoon that digs down not only in these proprietary scores, but also will give you that fundamental and technical information that we look at to make these picks. Taking a look at the price action in URI, the closing price is 88.17, and the 52-week high is 96.72, and the 52-week low is 44.85. Now we have the IV percentile rank coming in at 38%, so it means that we are implied volatility that's 38% higher than the 52-week low. We also have the return on capital at 41% for the option spread trade, the probability of success of that spread trade at 65%, and the estimated move coming in at $8.42 as of this pick. And the expiration date of the options we're going to look at is at 5/17. Now taking a look at the stock trade, we're going to look at buying stock, ticker symbol URI, at a limit price of 88.17 or better. Once we are filled on that particular order, we're going to place two types of orders. We're going to take a sell limit, which is to take targets to the upside, specifically $10.20 higher, so we're going to get out at $98.37. We're also going to put a sell stop limit in $10.20 below, which is roughly going to get you out right around that $78 mark on a sell stop limit. As always, use prudent size management, so you're going to use 1 to 3% of the percentage portfolio buying power available at the time of this trade. Taking a look at the single leg option strategy, we're looking at buying the May $87.50 calls for a limit price of $5 or better. If we are filled at $5 or better, we're going to put two orders in, one to sell to close to take profits and one to close if we're cutting losses. Specifically, we're going to put a price target above $5 above. So at $10, we're going to have a sell to close good until cancel on this May $87.50 call. Now, we are willing to take a max loss of $5, which is the debit we pay. So if you do take that max loss, make sure that you used appropriate size management when you're putting this trade on. In other words, no more than 1 to 3% of the buying power available when you put this particular position on. Also, if you do want to put a sell stop limit in, you can do that below the market of the purchase price. Option spread trade, we're taking a look at a bull put spread where we will be selling the $85 puts for $3.05, so we're collecting a credit. Now, we don't want to own the stock, and we want to have protection, so we're going to buy the May $80 puts for $1.60, which is going to reduce our total credit received on this $5 credit spread to $3.55.